Piet Viljoen is the only keynote speaker who has appeared at every single one of the Biz News conferences. There's a very good reason for that. He'll be with us again on Tuesday when he's part of a 4-person investment guru group that will be providing an investing masterclass. Don't miss it. If you haven't got yourself a ticket yet, there are still a few available, so go for it. But this morning, it's broader. We are going to talk more about the impact of what has happened in the past week and indeed how you should play it. Pete, sorry, I shouldn't have actually said how you should play it because you're an investor. You don't play. It's a little bit like saying to Warren Buffett, "What can I buy today?"
Yeah.
But how are you reading all this geopolitical turmoil?
So, Alec, for me, I like to take a step back and just think about what one can do to prepare for unexpected events, because all these geopolitical things that happen, war in Iran, European energy crisis, all these things are one hesitates to call them black swans, but they're very difficult to forecast. So a lot of people like investment professionals to give them a forecast, because a forecast gives one a sense of comfort, a sense of certainty, whereas I prefer not to even start with a forecast and rather prepare for any eventuality. And the way to do that is to run a diversified portfolio of different types of assets that respond differently to different stimuli, because I come from a point of view is that you don't know the future. And the only way to prepare for the future is to have a diversified portfolio. So that's the way I strategize. I think about what can I put into this diversified portfolio that makes sense, that is not massively overvalued, and that adds, I don't want to use the term value, but that adds an element to the portfolio that can protect against certain events or benefit from other events. So that's the way I like to think about it.
So we did see the troop build up. We saw the aircraft carriers coming from Asia and eventually from the Mediterranean towards Iran. So it's not like this wasn't telegraphed. There was a lot of commentary around it initially, but I guess just from a rational perspective, you had to know that something big was about to happen. Was there anything that you did differently to prepare for this? Or indeed, was there anything that investors could have done having seen the thing playing out?
No, I don't think so. In the fund I manage, the one I nicknamed the Cockroach, the Worldwide Flexible Fund, I haven't done a trade for 10 days. I've done nothing different. But I'm sitting with a portfolio that has a high exposure to energy assets because, number one, they're inexpensive, and number two, they are a protection against exactly this sort of thing. So they were in the portfolio not because I expected it or forecasted. It's because they protect against exactly this sort of thing, which might or might not happen. And if it doesn't happen, well, then they're not going to do very much. But it does happen, and so that helps.
So geopolitics generally, I can remember Warren Buffett saying at one of those Berkshire AGMs that you took us to, and thank you, Pete, because if it hadn't been for your initiative, well, I would have missed it, and many other members of the Biz News community as well would have missed the great oracle of Omar. Of course, it's over now. Charlie's gone and Warren's retired. But he said, we don't focus on the big stuff. It's too hard to call. We actually focus on the individual companies. Now, has that been a strategy that you would look at today going forward?
I think it's always a sensible strategy. And I think Mr. Buffett has always been very polite. He says it's too hard to forecast these geopolitical events. I would go a step further to say it's impossible to forecast geopolitical. So I would always look at putting together a portfolio that consists of undervalued assets, be they asset classes or stocks. It doesn't really matter, but I think that's where one should spend your time, is looking for undervalued assets and how to incorporate a combination of those assets into a sensible portfolio. That's a much better use of time than sitting there trying to forecast what's going to happen in the future and then building a portfolio based on that forecast.
I had a chat earlier in the week with someone that you know very well, Sy Jacobs, and he made a fascinating comment that the Israeli stock exchange, the Tel Aviv market, has been one of the best performers in the world, up 100% or 175%. It's just an extraordinary story. And something like that, is that purely because it came from a really undersold position, or is there a little bit of hype in there?
No, I don't think it's either of those two things. I think the Israeli stock market has always done very well because Israelis are at the leading edge of many technologies in the world, whether it's computer technology or medical technology or other technology. They are at the leading edge. So they are the companies they have in Israel are fantastic companies that create tremendous value for society as a whole. And that is reflected in the stock market. I don't think it's a cheap market that's bounced or hype or anything like that. There are a bunch of companies there that create tremendous value because they're run by very smart people who add value to society.
Okay, so now let's overlay that with the opponent of Israel in this current scenario. And there are not many Iranian companies who would be at the kind of cutting edge of technology, etc. It almost feels like an unfair fight, accepting that isn't what it is.
No, these sort of things are never unfair. I mean, I think Russia was in Afghanistan for 20 years, and America was in Afghanistan, which is just as backward as Iran, but they couldn't win that fight, even though one would have classified as an unfair fight. These things are hard and unpleasant, and it always brings me back to that saying which I use is never fight with a pig because you both get dirty and the pig likes it. It's that sort of situation. It's not a great situation if you go in there for a long-term ground war. But I'd be surprised if that is what happens. I mean, it's nice to have speculate about what will happen, and everybody's got an opinion about that. I have opinions about it, but I'm not going to invest based on my opinion or anybody else's opinion. But I'd be surprised if America goes in for a long-term ground war. I'd be very surprised.
You'd have to believe as well that the Americans and the Israelis haven't gone there just with one card to play, that there've got to be other forces on the ground that'll be the boots on the ground rather than their own boots on the ground. But I suppose we're now getting into the area of speculation, but it's something to keep our eyes on.
It's something interesting to watch and speculate about and have opinions about. But, I think the important thing is not to invest based on the latest opinion you've read or seen somewhere.
Very important impact or information there. What I do want you to unpack for us, because of all the asset managers in South Africa, there are very few who have even given even a slight thumbs up to Bitcoin and to cryptos. You have, and it's due to you that we were prepared to put it into the BizNews portfolios, and the tribe have done very well out of that. The latest feedback that we're getting from the crypto gang is that Iranians have now rediscovered Bitcoin is a really good way to protect your capital. And it was up 7% last night after coming under a lot of pressure. How are you reading the whole Bitcoin market right now?
So Bitcoin or cryptocurrencies, it's quite possible that the blockchains on which these cryptocurrencies are based. In other words, if one gets back to basics, what are cryptocurrencies? They're the reward for solving cryptograms which keep information secure on a blockchain in a decentralized format. So that's what a cryptocurrency is. There is a non-negligible chance that blockchain technology changes the way the financial service system works, changes the rails on which it runs, and creates tremendous value. And that value will then ultimately be reflected in the price of the different cryptocurrencies associated with these blockchains. So my point of departure has always been, I think that chance is non-negligible. And as a result, I would always allocate a portion of my portfolio to those cryptocurrencies. I wouldn't put all my money into it, just like I wouldn't put all my money in South Africa, although I believe that, that assets are cheap here. I still wouldn't put all my money into it. And the same goes for Bitcoin. I think it has the possibility of a massively value-creating future, but I don't know whether it's going to be the case or not. So I will allocate a portion of my portfolio to cryptocurrencies in line with the odds that I expect them to change the financial service system, which I think is non-zero. So that's my point of departure. It's always been that. It remains the case. I do think that any new technology needs sort of a what's the term I'm looking for? It needs the one thing application that changes things, and I think Bitcoin could be regarded as one of the premier real assets or hard assets out there. Hard assets are those sort of assets which aren't anybody else's liability, like gold. If you own gold, it's not somebody else's liability. If you own debt, government bonds, that's a liability of the government. If you own equity in a business, that's a liability of the business. You are dependent on those counterparties. When you own a hard asset or a real asset, you are not dependent on anybody else. And gold is an asset like that. Precious metals are assets like that. Land could be an asset like that. But I think given Bitcoin's limited supply, its characteristic that it's easily transportable. You can buy Bitcoin in Iraq and you can sell it in America and get your money out of the country. I think it has the characteristics that it could become a sought after asset in portfolios that want to have exposure to real assets or hard assets. So, apart from the technology and how that could possibly change the financial services sector, it could also be seen as a real asset similar to gold and possibly even better than gold over time. So there's that opportunity as well.
It brings me back to an event that I was at in Davos a couple of years ago, hosted by the Financial Times with Neil Ferguson. And Neil Ferguson wrote The Ascent of Money. So if any historian understands money, it's got to be him. And he was asked a question about Bitcoin. And he said, if I lived in a turbulent political country, I'd have a very large percentage of my assets in Bitcoin, which I always thought was really interesting, because here's the guy who understands money. And now the Bitcoin bros are telling us, you're seeing it real time in Iran. But why would it have taken them so long to kind of click to this, that this is a way, if you're in a very difficult environment there, to protect your wealth?
Yeah, well, I think that's always been the case. Here in South Africa, when the rand was very weak a few years ago, a lot of people did buy Bitcoin for that reason, to be able to take their money offshore or have it in some other denominated currency than the rand. And it's happened in also Venezuela was a hotspot for Bitcoin purchases when they had their political turmoil. So it's happened over the past 10 years, many places in the world, and Iran is just another manifestation of the same thing. To have a transportable asset that you can take with you, you put it in your cold wallet and you put it in your pocket and you get in the plane and you leave and your money is with you. That's a very valuable attribute.
Indeed. Okay, we've spoken a little bit about South Africa. Unfortunately, for a global perception, South Africa seems to be one of the few friends that Iran still has. It's one of the few countries that has come out very strongly in favor of Iran, and not surprisingly, because it had a naval exercise recently, and a number of those ships are now at the bottom of the ocean. I think maybe another one was torpedoed yesterday. What does that do to South African assets, though, given the stance of the government?
Look, I think our government is deluded. I think they are completely, any rational thinking is completely obfuscated by their views on, social counterparties and that sort of thing. And there's no rational thinking happening there, but there hasn't been for a long time. And despite that, the economy chugs along because we have business people here that can do things for themselves. That's one aspect. And the second aspect is this country is well endowed with natural resources, which the world wants in increasing volumes, given the reindustrialization of the US being their policy, the rebuilding of supply chains, localization of supply chains. To do those things, they need the sort of resources that a place like South Africa has. And I think that supersedes any political irrational thinking, which is evident from our government on a daily basis. Those sort of things supersede that and overcome that. Of course, if we had rational political leaders, we could have done even better. You know, the third advantage, which I neglected to mention, is we're sitting on the southern tip of Africa. I mean, there is not, the chance of a war breaking out around us anywhere is quite low. So I think we're quite safe from that point of view. Whereas you look at Europe, the Middle East, Western Asia, I mean, that's a hotspot. Up until recently, people thought Dubai was a safe harbor.
Mm-hmm.
And it's been proven to be less so, possibly, than maybe Cape Town at this point.
That is extraordinary. There have been a number of people that I know who have relocated to Dubai on the strength of South Africa's crime is too high, etc. So, well, the world changes and you refocus and you rebase your opinions on that. But when you think about a rational government, and you mentioned that in passing, I'd like you to give us a thought on whether the penny will drop and whether it's closer to dropping. And I'll tell you why I ask this, because I was in a breakfast the day after the budget where Enoch Godongwana spoke about calling others neoliberals. And he said he used to do the same thing. And he would go back and drink his Heineken and congratulate himself. And he then explained why those who call others neoliberals are actually on the wrong page, because that's an irresponsible thing to do. Now, that's a long, long way to come for Enoch Godongwana, who's very instrumental in the middle of the ANC. And my question is, do you see any evidence of others within the party starting to see that or smell the coffee, like on BEE and other issues, which are such a dreadful blockage on the potential prosperity of South Africa and greater jobs?
So the short answer is no. But then again, I don't have contact with anybody in politics or in government, so I wouldn't really know. But I think there will be isolated cases like Enoch Godongwana who are starting to see the light. When they drink the Heineken, they type in the iPhone, they've got to ask themselves, where does this stuff come from? And why is it there? It's not because of socialism, I can tell you that. But the counter argument to that is there's nothing as crazy as large groups of people clinging to some sort of misguided philosophy. And that is the ANC in a nutshell. I mean, they're clinging to this misguided socialist philosophy of theirs with their bedfellows in Iran and other places. That's not going to change, I don't think, despite one or two individuals possibly changing their tune. The only comfort I have is that it's highly likely that this group of misguided individuals that is governing the country at the moment get voted out at the next election. And then I think if one looks through to the future and does a bit of game playing, I think that is not an impossible outcome.
I suppose that also would parallel the improvement that we're seeing in Israel, because the idea there is that once the Middle East normalizes, once you get rid of all the bad actors there, or the worst of the bad actors, then Israel will be able to flourish as never before. Perhaps for South Africa, we could be in a similar situation. Is that part of your thesis for, investing in JSE listed stocks?
No, it's not. My thesis is fully dependent on valuation. Our assets were massively undervalued. They remain undervalued. So all I'm looking for is a return to normal valuations. if this group of misguided individuals get voted out and we have some sort of rational policy implementation over the next 10 years in the country, that will be added jam on top. But that's not something I'm building into my work, because these political changes take a long time. They tend to be turbulent and not easy. So no, that's not something I'm building in. I'm not basing my view on a positive investment outcome in South Africa on regime change. I mean, I don't know what's going to happen there. All I'm looking at is the valuation of really good businesses in this country on P's of 5 and 6 and 7, and they deserve to be on P's of 10, 11, 12. It's as simple as that.
Well, I think that no doubt what happened with Normandine Farms over a month ago yesterday, and only now that it's coming to light, what those 50 parliamentarians and police with automatic weapons, and they found nothing, Piet, not a thing. I had an interview with Sean Hudson yesterday, who explained that it was almost like they were trying to destroy the business. They wanted to close the business down, but they were unable to do it legally. So they just found a reason. And that kind of thing, as long as you have that, well, we can be the greatest optimists in the world, which I know you're rational, not optimistic. But as long as you have that, it's not going to change. Looking at for value, because we are now in an environment where a lot of investors are sitting on cash. I think your cash holdings, and you can tell us about that, are probably higher than usual. But where do you find value in the current environment without taking too much risk?
Yeah, so I think there's two answers to that. The first place remains in countries like South Africa, which are under-owned by global investors and local investors. And there are a couple of places like this. And these countries are basically linked to the whole resource environment, the positive environment for resources. So I still think South African assets are cheap and undervalued and a good source of uncorrelated returns to global markets. So that remains the case. And I think the other source of returns, uncorrelated to other assets, is in, and I spoke about this earlier, real or hard assets. Things like gold, like royalty companies. The one I like a lot is Texas Pacific Limited, Texas Pacific Land. These are businesses that don't do mining or drilling themselves. They own the land and they take a royalty from the mining companies who actually exploit the resources. So they don't put any capital in. They just sit there and take a royalty, and they run with operating margins of 70, 80%. So it's very much a real asset type situation. And these companies are mainly to be found in the US. There's very few of them elsewhere in the world, but those are the sort of businesses I think that still offer a good source of uncorrelated returns to diversified portfolios.
Where did you find that company, Texas Pacific Land?
I read about it probably about the first time about 6 or 7 years ago in the work of Horizon Kinetics, which is an American fund management company. They're a big shareholder in that. That's why I started reading about it and trying to understand what's going on there.
So you get your information from unusual sources. I guess you read a lot.
That's right. I read a lot. The only newspaper I read is BizNews, or news that I read is BizNews. I don't read news generally. I prefer to read annual reports and non-consensus research. And there's a lot of that on Substack and other places that you can find. And I think there's a lot more information there.
Non-consensus, meaning?
Yeah, in other words, I don't read sell-side research either very much, the stockbroker research. I think that is basically for people who are investing in the index and overweighting this and underweighting that. And for me personally, that's not a sensible way to invest.
Mm-hmm.
I'm looking for good ideas which are uncorrelated with other ideas.
Now, you are a value investor. You do, we can hear from this conversation that you don't waste time. You're certainly thinking about things carefully. What have you been thinking about to tell us next week at BNC8?
So I think what I've been thinking about over the past few weeks, thinking and writing about, and I think this will be the topic of my talk next week, is is how to deal with uncertainty and what tools you can use to help you deal with the uncertainty, which is always present. I mean, every time you think about the market, you think, oh, it's so uncertain now, and I don't know what's happening, and what if this happens? What if that happens? But that is 100% of the time the case when you think about the market and how to deploy your assets into the market. It's always uncertain. It just depends on exactly what is happening at that time that is creating the uncertainty. So my talk will be about how to deal with uncertainty, how to build a portfolio that deals with this perennial uncertainty in the market.
Well, that's completely aligned, and we didn't swap notes before this, with the theme of the Biz News conference next week, which changed in the last week, and that is opportunities in dangerous times. So dealing with uncertainty, opportunities in dangerous times, well, coupled on the tote. Piet Viljoen is the founder of ReCM and the portfolio manager of the Merchant West Value Fund. I'm Alec Hogg from biznews.com.